The CPI came in at a gain of around 2.5%, and that was the lowest reading since 2021. So pretty wild. So I think there's a high likelihood that the Fed's going to start cutting rates in about 1 week from now. So I would love to hear your take about, what do you feel that the Fed's going to be doing in the next meeting, and also how future rate cuts by the Fed potentially could impact mortgage rates and, of course, the housing market as well.
Yeah, there's a lot to unpack there. So
yeah.
The Federal Reserve Bank has pretty much all but guaranteed that they're going to start cutting interest rates on September 18th. Jerome Powell, who is the chairman of the Federal Reserve Bank, when he spoke at Jackson Hole, which is a big central bankers convention, what he said was, quote, "It's time for the Fed to start cutting interest rates." And ever since then, there's been a lot of kind of reaffirming that same thing, that the central bank believes that it is time to start cutting interest rates. So that's part one, that it is pretty much set that they're going to cut interest rates. Number two, when it comes to the CPI data, there's a few points that I want to make clear here. And this might be very basic. I just want to make sure we're all on the same page. When we get data that inflation is 2.5% and that it has fallen from the highs of 9% or 10%, that doesn't mean that the prices of things have fallen since 2021. What that means is that the prices of things are still rising. They're just not rising as fast as they were before. And the reason why this is so significant and important to understand is what we saw between 2020 and 2023 is that inflation was way up here. Reported inflation was way up here, and wage growth was down here. Right. So we had this huge chunk of time where the prices of things were rising faster than the average person's incomes. And now what the data is saying is that reported inflation is lower than wage growth. And so everything is fixed. Inflation is lower, wage growth is higher. But what we're forgetting is that we had this big chunk of time where reported inflation was a lot higher than incomes. The reason why that matters, and the reason why I keep saying reported inflation, is because for the average person, the real inflation that many people feel is actually higher than the reported inflation. And so this is why it is so important to understand this, because now when the Federal Reserve Bank comes in and they say, we won the war on inflation, inflation is now heading towards 2%, inflation is no longer a problem for Americans, what we're going to do now is we're going to start cutting interest rates. Well, there is a risk that comes with that. And that risk is, could we reignite this inflation problem? Right. Why? Because one of the largest portions of CPI inflation is housing. And housing is also one of the most sensitive industries to interest rates. Yep. Not just that, we're in such a weird housing market still, where you have all these people that want to buy a home, dormant home buyers, that are sitting on the sidelines saying, I can't wait for mortgage rates to come to 5.5% because then I'm going to start buying. Why is that a concern? Because let's just play the scenario out. You list your home for $500,000 for sale. If mortgage rates come down enough and you have more dormant home buyers saying, I can afford a $500,000 home now because my mortgage payment is a lot cheaper, let me go make an offer. And now instead of having 2 or 3 offers, you have 11 or 12 offers. Now, all of a sudden, you might have a above asking price home for sale, which could push home prices up even higher. Why does that matter? Well, hey, you got a cheaper mortgage rate. Great. But now you got to borrow more dollars. So could that balance out? We'll see. But then the second concern is, what does that do to CPI? Because if home prices start to go up again, does that mean the CPI starts to go up again? And this is where there's a big question mark, because we don't know where this is going to go. And we have to assume, I got to give the Federal Reserve Bank some benefit, right? They got to know something, that we're not the only people that are knowing this. Like this has to be something that they've thought about.
Yeah.
I don't know what their models are saying about that. Maybe they're saying that we're more concerned about a recession, that because the economy is slowing, maybe they're foreseeing a deeper economic slowdown and people won't be able to buy homes and this won't affect inflation. I don't know. But this is a concern that obviously I think a lot of people are having now Because if we go back to 2020, 2021, when transitory inflation first came around, a lot of people were saying, well, are you sure it's transitory? I mean, what does that mean? And then, of course, later that year, we found out it was not transitory. So take everything that the Federal Reserve Bank says with a grain of salt. Take everything the government says with a grain of salt. Take care of your own finances and be smart with your money. That's always my advice, because I can't give financial advice. I'm just a random guy on YouTube. But what I can say is be smart with your money.
Absolutely. I think that some people are thinking, and let me know your thoughts regarding this, that if rates decrease to, let's say, 5.5%, that there's going to be a lot of people listing their houses for sale, which is going to crash the housing market, right? And so I'd love to hear your take regarding that. Do you think there are going to be, let's just say, a significant decrease in rates? Do you think that demand will rise further or higher than supply, or vice versa? It sounds like you're thinking more demand side.
Yeah, I'm more on the demand side, because we still have such a low supply of homes. I don't think more people listing their homes voluntarily would cause that crash. And the reason why I say that is because we would need a significant rise in supply without a increase in demand for that the significant price drop to happen. And there are a lot of dormant home buyers, people that want to buy homes that have been priced out of the market or that are just waiting. And so I even if prices started to come down with the lower mortgage rates, I think that there would be more buyers out there. And the reason why I say that also is if you take a look at Home Depot and Lowe's, in their most recent earnings calls, both CEOs of Home Depot and Lowe's said the exact same thing, that they're expecting lower sales, but as soon as interest rates drop, they're expecting a spike in sales. Why? Because they have a lot of potential home buyers, but also people that want to renovate their bathrooms and kitchens and basements that are waiting for lower interest rates so they can refinance these remodels. Yeah. So I don't know. I mean, I think what I like to say is financial opinions are like armpits. Everybody's got a couple and some stink more than others. I don't know what's going to happen. All I can say is these are the factors that are happening. And my goal is, how can I win no matter what's happening? And I really think where the real kind of wealth is built.
Yeah, I agree with you. It's I always tell people it's like impossible to project or figure out what's going to happen with the housing market because there's so many things that impact our market, which is, rates, how many people are going to list their houses for sale, et cetera. And so my advice ever since I've been a realtor for 11 years is always buy what's right for you, right? Because it's so hard to time the market. And I get a lot of comments from people on the channel saying that they're waiting for prices to decrease. And I was actually looking at the data, which I was really mind blown by this, because according to the National Association of Realtors, their data, they have data that goes back to, I think, the late 1990s, if I'm not mistaken. But in any case, over the past 34 years, there's only been 4 years in which home prices decreased compared to the previous calendar year. And that was in 2007, 8, 9, and also 2011. And just looking back at 2022, we had rates doubling, and we also had inventory doubling, yet prices still increased on a national level. Just absolutely mind-blowing. So I kind of worry about the people that are waiting for people who are qualified to buy today, but they're waiting for a housing market crash that may not actually happen.
Yeah, I mean, if you're trying to buy a home, make sure you can afford the home. I mean, waiting for a crash is, of course, if a crash happens, you can find a great opportunity, right? I mean, I was buying real estate in 2011, 2012, 2013, and that was the greatest real estate opportunity that we've seen in our lifetimes. Yeah. I was just fortunate. I had no idea if that was a great opportunity because I was just starting my financial education journey. But, you can wait around for years because you never know what's going to happen. And you also have something called the X factor, which makes it difficult. And the X factor is what I like to call government intervention, because when the 2020 pandemic hit, it was the worst recession since the Great Depression, the fastest stock market sell off after. But then we went from this market crash, fastest stock market crash ever, to the fastest stock market
Yeah.
rally in the history of time. Which, look, I mean, I cover financial markets. We've been doing this for a while, and I've been involved in the financial media space. I love studying financial history. I had no idea that the Fed was going to stimulate to the extent that they did. And stimulus and kind of saving the economy has become a much easier thing. When it first happened, or when it started happening, like 2000, 2001, when the dot-com bubble burst, it was a big deal to do a little bit of stimulus. Like, it was a big deal. When 2008 happened, to do $1 trillion quantitative easing stimulus program, I mean, the world was ending because it was that big of a deal. 2020, we're doing $5 trillion of money printing and injecting so much more stimulus into the economy. So, and not to mention, we stopped evictions, we stopped foreclosures. So it's very hard to predict these types of things in a free market, let alone. But then when you have these external factors as well, it becomes even more difficult.
Right.
So I think what you said is spot on, that if you're thinking about buying a home, you could wait, but no one knows how long you're going to be waiting. You got to accept that risk, or buy a home that you can afford and
Right.
buy when you're ready. And I think, if your goal is to make memories with the home, buy it when you're ready. Buying a home is different than buying an investment property. And I think people start to commingle those thoughts where I want to buy a home that's going to make me a lot of money. Well, then why don't you buy a rental property then? Because then you can look at the numbers differently. Because when you analyze a rental property versus the home that you live in, you look at it very differently. So if it's a home that you're going to live in, make sure you can afford it.
Yeah.
If it's a rental property, make sure it's making you money. And I think people start to commingle those two thoughts, which is where people get really confused.
Yeah, absolutely. I agree. I think that the best way is to like house hack, kind of a mix of like a house you're living in plus an investment, buying a house, like a 3-bedroom, rent out 2 bedrooms if you can. I mean, you can use that to minimize your housing costs. And then you can, if you hold the house for a long period of time, realize the gains of equity as well. So if I was going back to my late 20s, early 20s, I would definitely house hack. That would be a great opportunity to, buy some real estate and have some income from it as well, which of course will minimize your housing payment as well. Well, I know you have minimal time, and so I want to wrap today's video up. I actually just signed up for Market Briefs, which is your newsletter. And this is not a paid promotion, not an affiliate link, but I'll provide a link in the video description below. I
love it.
Yeah. So it's basically like a snapshot. Well, I'll let you just describe it. But the reason why I like it is because when I go into the mass media, if I want to learn about what happened and let's just say like the CPI or whatever, I have to read like a long article. It's hard to find out the nuts and bolts, the key takeaways there. And what I really like about Market Briefs is that you have one email. It probably takes 5 minutes to read, and it gives you a snapshot of what happened the previous day. So I think it's fantastic. And so again, and not a paid promotion whatsoever, but maybe you can kind of describe like, how that came about and also, what it is.
Yeah, well, first off, thank you for reading Market Briefs and thank you for the support. I love hearing that. So thank you. So I created Market Briefs first on accident because the pandemic hit. I went from making 3 videos a week to 7 videos a week, and I needed a way to stay up to date on what was happening so I could make videos because the whole economy went upside down. So I asked my team to give me a daily briefing. And that became then Market Briefs. So it started off just as a way for me to stay up to date, and then started promoting it on YouTube, and then people started liking it. And what we do is our goal is to, number one, save our readers time, but also save emotion and stay away from the sensationalism. Because we know if you go on YouTube, if you go on Yahoo Finance, if you go to anywhere, it's about clicks. In order to drive clicks, you have to have an exciting title. Which can be really annoying and a pain in the butt sometimes. And so I wanted to kind of move away from that with something that could reach more people. And Market Briefs is one email every morning that breaks down the economy, the housing market, stocks, crypto, and the global economy into a fun and witty newsletter. You can read it in less than 5 minutes. It's completely free. and we break down the things that you need to know. So it's a fun resource that we created as a way for people to know what's happening in simple English, but also be able to avoid all the emotions, because we just tell you what's happening in an unbiased way in that one email.
Yeah, absolutely. What I learned about reporting, housing market trends is that the media can be very biased. And so reading one report, you're like, that didn't actually happen. If you actually look at the data, that's not really like the key takeaways. Here's the key takeaway. And I think that Market Briefs does a really good snapshot regarding what's happening. And like you said, avoiding the sensationalism that you see on YouTube as well. So I can't wait to read more Market Briefs myself. And I'll provide a link in the video description below for that as well. Jaspreet, it's been a pleasure. This is the first time, us chatting. I just honored that you would take the time out of your busy day to share your opinion regarding Fed rate cuts, advice for home buyers, etc. So I appreciate you so much. Thank you for joining us today.
Thank you, Jason. Congratulations on your success, man. I'm hoping to stay in touch.
Yeah, absolutely. Thank you so much. And everyone who is watching today's video, please like and subscribe, and also check out Jaspreet's YouTube channel as well. I'll provide a link in the video description below for that as well.
I love it, man.
Have an amazing day. Thank you, everyone.
You are 25 years old right now. You go out and you put $8,000 down to get yourself a brand new BMW, because everybody's got a nice BMW nowadays. And now you got these expensive car payments that you're going to be paying for the next number of years. Now, after 5 years, you pay off the car, and you might think that you're going to be car payment free, but what ends up happening to everybody in this situation